With conflict in Eastern Europe causing gas prices to rise, are there efficient energy alternatives that can turn a profit? Let's start the countdown and find out. Welcome back to the Investor Place Launchpad, where we take a look at trending investment ideas and try to rocket them to the moon. I'm Head of Mission Control Aaron Davis, and with a geopolitical conflict that has impact on many fronts, one that is perhaps felt most by the average citizen in the US has been the surging cost of gas. With sanctions aimed at Russia, which accounts for 10% of the global supply of crude oil, the push towards alternative energy has never been closer to a tipping point than right now. As always, before we dive in, we'd love to continue to grow our channel here at Investor Place, so feel free to hit that like and subscribe button and smash that notification bell to stay up to date with us here at the Launchpad. With all of that out of the way, let's see what's going on with oil, gas, and the alternatives that may make way for potential investments. In a televised event this past Thursday that addressed a series of issues regarding the current Russia-Ukraine conflict, President Biden announced a plan to release oil from the Strategic Petroleum Reserve, a deep underground storage complex that holds an estimated 600 million gallons of crude oil. With prices rising at the pump, Biden's attempt to alleviate costs was clear, with the president stating, "I know this is hard and that Americans are already hurting. I'll do everything in my power to limit the pain that American people are feeling at the gas pump." While the overall effect has yet to be seen, there are those that believe that this move won't have much effect on prices. In a Yahoo Finance interview, Isaac Boltansky, BTIG Director of Policy Research, noted, "We're already at the lowest level of reserves in the Strategic Petroleum Reserve since 2002, so we're already bumping up against constraints there, and frankly, it hasn't had that much of an impact." As oil prices continue to rise, there are those that speculate that alternative energy solutions are now more pertinent than ever, even those in the traditional energy sector. Yesterday saw Chevron Corp, the second biggest oil and gas producer in the US, buy biodiesel maker Renewable Energy Corp for $3.15 billion, a huge bet on alternative fuels. In response to US refiners facing pressure to shrink their carbon footprint, many US refineries have been ramping up production to decarbonize fuels. With Chevron's target to cut operational emissions to net zero by 2050, along with pledging to invest $10 billion to reduce its carbon emissions through 2028, $3 billion of which are earmarked for renewable fuels, it's clear that this move indicates a shift in priorities in the energy sector. As CJ Warner, REG president and CEO, puts it, "This transaction delivers premium cash value to shareholders and will give us additional resources as we aim to accelerate growth and strengthen our collective ability to deliver sustainable fuels to our customers and the world need. Our employees' hard work and dedication have built a fantastic renewable fuels company and made this transaction possible. We look forward to joining Chevron's team." Biofuels aren't the only alternative green energy source. As EVs continue to gain traction in the automotive industry, the batteries and storage that power EVs are just as lucrative as investments, when they are in fact the primary drivers, pun intended, to the success of an electric vehicle. While battery storage continues to increase the longevity of a single charge, there is still the obvious need to charge said battery on a trip. Enter ChargePoint, the quote, "world's leading electric vehicle charging network. With hundreds of thousands of places to charge, we design, build, and support all of the technology that powers this network, from charging station hardware to energy management software to a mobile app. We also offer residential charging with ChargePoint Home so you can charge at home and on the go." With Q3 earnings that show revenues increasing by 79% year over year, reaching $65 million, the company's network charging revenue was the highlight, contributing $46.5 million to overall revenue. As ChargePoint increases its outlook into 2022 with revenue projections between $235 million and $240 million, it's clear that the premise of charging infrastructure is one of the futures of alternative energy, with ChargePoint currently leading the way. Finally, Investor Place contributor Tezcan Justil looked at 7 of the best clean energy stocks for 2022 to buy now. Justil's list is comprised of a variety of companies from solar, wind, hydrogen, tidal, geothermal, and biomass energy businesses. For a full breakdown, you can see Justil's list over at investorplace.com, but Justil recommends the following: ChargePoint, Clearway Energy, Darling Ingredients, First Solar, Ormat Technologies, SPDR S&P Kensho Clean Power ETF, and finally, Sunrun. While we already took a look at ChargePoint, one of the unique recommendations is SPDR S&P. The exchange-traded fund invests solely on businesses focused with clean energy sources, which include Tesla, Enphase Energy, and First Solar, among others. Like many of the things we cover here at the Launchpad, the alternative energy sector is continuing to evolve, and leaders in the industry will certainly showcase not only innovative new technologies and energy alternatives, but profitable ones as well. But what do you think? Is alternative energy the solution to current gas prices? Will other charging networks eventually upend ChargePoint? Are there energy sectors that you think are the next big thing? We'd love to hear your thoughts in the comments section below. Well, that's all we have from the Launchpad this week. If you'd like more insights like this and Tez Candice-Jill's full breakdown of best clean energy picks, head on over to investorplace.com where we release articles daily. And as always, check back with us here at the Launchpad where we will continue to look for trends like alternative energy. And as always, try to shoot for the moon.